For a deeper look into the markets, let's bring in the aforementioned Richard Bernstein, CEO and CIO of Richard F. Bernstein Advisors and CNBC contributor, FN for short. Needed a middle name. I gave you one.
Yes,
don't get a lot of thanks
for
it, but everybody knows it. We just had one of our previous guests talk about record profits next year for corporations. You still are in the camp that there is at least not a zero chance of a profit recession next year. Why?
Correct. I think it's a whole cocktail of events, and I think when people talk about record profits, they're talking about the dollar value of profits, and they're missing that the rate of change has been slowing all year. I mean, even some of the companies you've talked about this morning, earlier on in the show, their profits growth is slowing quite dramatically, and people have kind of missed that. I think there's a cocktail of events that could cause a profit recession next year, whether it's rising wages, whether it's continuation of tariffs, whether it's a lack of pricing power, all these different issues. I think that's the number one issue for the first half 2020 is, does profit growth turn negative?
Kind of interesting. I was thinking that your inflation angst seems to be incongruent with a profit recession, unless a profit recession is caused by margins from higher wages, which you could have both then, higher inflation and lower profit.
Exactly. So what's
really? I got that right?
I think pretty much, Joe. Very good.
I don't know if we need you.
Yeah, see you.
Okay.
But stole it all from his notes.
Yeah, I did. No, I know, but I'm not stealing. I'm thinking they seem mutually exclusive, but they're not. I came up with that myself. Anyway.
So the question is, as profit growth turns negative, do companies just keep eating all these costs? And the odds are they don't. They start laying people off. They start cutting back on wages. There's all kinds of things going on. But one of the things that people just can't believe that would happen would be that they start raising prices. And there's been company reports this quarter that have come out, or last quarter that came out, where companies started talking about returning of pricing power. Now, it wasn't a lot of companies and it wasn't widespread, but it started to happen. And I think that's you know, if you think about tariffs, you think about wage costs, think about all the input prices that are going up, eventually that's what's going to happen. Or you're just going to squeeze the corporate sector and they're going to lay everybody off.
And the consensus, there's no doubt, as you point out, it's like a pin drop when you mention inflation. I mean, everybody's on the same side of that trade.
I think there's two huge consensus views right now. One is that the consumer is healthy and nothing's going to stop that. And number two is there's never going to be inflation again. And if you think what's the contrary there, it's a little more inflation, the consumer starts getting hurt. I mean, that's
So Richard, I'm in the consensus of we need not worry about inflation now. Mm-hmm. Okay, it's not because I don't think wage costs are going to go up. They're going to go up.
Right.
But if you look at the supply side of the national and global economy, most companies, not all, will find it very hard to pass on that to higher prices.
Absolutely. And I think, you know, Mohammed, you're absolutely right. And I think that's been the cap on inflation for many years now, has been globalization. I would actually argue, Joe's going to love this, I'm going to sound incredibly bearish here for the next 15 seconds. I think we've seen the peak in globalization, and I think over the next 5 to 10 years, we will see globalization contract.
So I'm with you on that, but to say that that's going to lead to short-term inflation?
No, well, let me clarify. I would say not inflation like 4 or 5% inflation, but could it be higher than people think? I think that's a layup.
But by how much? By how much?
Well, if people are expecting 2, what if it's 2.5 or 3? That wouldn't be a lot of inflation by historical standards.
Higher inflation because of the end of globalization, because everybody's going to go back to manufacturing on their own shores and not looking for cheaper and cheaper
And for us, as
a
very unproductive economy here in the United States, that means inflation here. We just don't make stuff.
Right. I mean, it's good news for the jobs front.
It could be. It could be, right. But you could have where wages go up, but also prices go up, so purchasing power may not change that dramatically.
In your mind,
that's not in the next 2 weeks.
Anything that diminishes globalization is, in your mind, I would view bearishly. See, I'm not.
I do view it. You do view it. Well, there's certain pockets that are that it's great for. Look, if you're buying small domestic companies, that could be very bullish over the next decade. Right. You know, if you're buying raw materials here in the United States, that might be very bullish. But it may not be bullish for, say, the consumer, where, you know, if you think about everything that we're buying, you know, none of it's made here. So that's a big issue.
So your big call in your notes is that 2020 we don't have gains as big as 2019. That's you're sticking your neck out.
Oh, really sticking my neck out.
Yeah, so we don't do 25%. That's still wide. What do you think we can do?
I think
single digits?
I think it'll be just single digits.
Up is something.
Up would be
down.
good. No, up is not down, exactly. So I don't think, look, we're benchmark weight equities. We're not under our desk in the fetal position. So I think that's an important differentiation. But I think what's interesting is that people are getting more and more and more bullish. I mean, late cycles are dominated by momentum, where people get more bullish simply because the market's going up. And then they find reasons why the market's going up, and they react accordingly. That should be a warning sign to everybody that momentum is starting to drive sentiment.